Strategy is building a Bitcoin-backed empire that is uniquely positioning it to dominate the fixed income market for decades to come. Yet, most people have no idea what's unfolding. So let's break it down. Firstly, what exactly is Strategy doing? Essentially, it's building a Bitcoin-backed credit curve by issuing products with different risk-return profiles. So let's unpack each product. So first, we have STRF. STRF sits second in the capital stack below convertible bonds. It offers relatively moderate yield, but it is super collateralized, meaning that each share is disproportionately backed by Bitcoin. So STRF pays a fixed annual dividends of $10, and the dividends are cumulative, which means that if dividends aren't paid, then they compound quarterly at 1% per year, up to a maximum of 18%. So think of STRF as investment grade debt, which means that it is safe enough for conservative investors like pension funds, banks, and insurers. So in other words, STRF is for the risk avoidant investors that want predictable income and downside protection. Second, we have STRK. So STRK sits third in the capital stack below STRF. It offers relatively low yield, but it comes with high upside potential. So STRK pays a fixed annual dividends of $8, and the dividends are cumulative. So again, if dividends aren't paid, they compound quarterly at 1% per year, up to a maximum of 18%. Now, STRK also comes with a perpetual call option to convert to common stock at $1,000. So, in other words, if MSTR hits $1,000, holders of STRK have the option to convert their shares into common stock at a ratio of 10 to 1. So every 10 shares of STRK entitles you to 1 share of MSTR. So STRK is for the dual optimizer investors that want a mixture of predictable income and Bitcoin upside. Third, we have STRD. So STRD sits fourth in the capital stack below STRK. It offers relatively high yield, but it comes with fewer protections in place. So STRD pays a fixed annual dividends of $10, but the dividends are non-cumulative. So unlike STRF and STRK, there's no obligation for Strategy to pay any missed dividends. Now, you might be asking why investors would choose STRD over STRF, since they both pay a fixed dividends of $10, yet STRD comes with fewer protections. And the answer is because STRD theoretically should trade at a lower price compared to STRF, which would render its effective yield higher. So think of STRD as junk grade debt. It is for the yield maxi investors that want maximum yield and are comfortable with less protections. Now, for easy comparison, here is a table that I've put together that summarizes the characteristics of each product. If you want to get hold of it, you can find it on my X account at Chris M. Millas by scrolling to the highlights tab. So why is all this important? It's important because different investors are optimizing for different outcomes based on their volatility, risk, and return goals. So the more products that Strategy creates, the more investors they can attract, the more capital they can raise, and the more Bitcoin they can purchase. But it doesn't stop there. Since each product is backed by Bitcoin, the more Bitcoin Strategy acquires, the more collateralized each product becomes, the higher the credit rating, which enables Strategy to attract even more capital, and the flywheel repeats. So hopefully this all made sense. Hopefully now you have a better grasp of STRF, STRK, and STRD, and understand how and why Strategy is poised to dominate the fixed income market. On that note, I appreciate you watching. And as always, until next time, remember the best is yet to come.